Ah, the language of love. But what about the language of forex trading? Impress your date and boost your trading knowledge by mastering these essential forex terms. Let's dive in. Major and minor currencies. The eight most traded currencies are the majors, like the USD, Euro, Japanese yen, and British pound. All others are minors. Base currency is the first in a pair, like USD in USD slash Swiss franc. Quote currency is the second, and the pair shows how much the base is worth in the quote. Pips are the smallest price change in a currency pair, typically the fourth decimal place, except for the Japanese yen, where it's the second decimal place. Bid price is what the market will buy a currency pair for, and the ask price is what it will sell for. The difference between them is the bid ask spread. For example, in British pounds slash USD at 1.8812 to 1.8815, the bid price is 1.8812 and the ask price is 1.8815. The bid ask spread is the difference between these prices. Here it is 3 pips. In USD shares Japanese yen at 1.8830 slash 1.1834, the spread is 4 pips. Transaction cost is another term for spread, the cost of executing a trade. Cross currencies are pairs without the USD, like Euro, British Pound, which can have higher transaction costs. Margin is the minimum deposit needed to open a trade, often a percentage of the trade size. Leverage is the ability to control a large position with a relatively small amount of capital. Now, you are a notch higher with Forex trading terms. Thank you for watching, and don't forget to like, share, and subscribe. Happy trading!